What if the next financial crash is already guaranteed? Not because of greed, not because of corruption, but because of how money itself is designed. Every major collapse in history followed the same invisible rule, and today we are closer to breaking it than ever before. Money has no real value on its own. It is not food, not shelter, and not something you can use to survive. Money works for one reason only. We trust it. But trust is fragile. When prices rise faster than wages, when savings quietly lose purchasing power year after year, and when entire generations feel poorer despite working harder than those before them, trust begins to disappear. And when money loses trust, societies do not just struggle, they destabilize. History keeps repeating the same pattern. The Roman Empire collapsed after its currency was slowly debased. The Great Depression followed an era of excessive credit expansion. The global financial crisis of 2008 was built on layers of debt stacked on top of each other. The pandemic exposed how fragile the global system truly is. Each time, we are told the same story: unexpected shocks, rare events, temporary disruptions. But when crises repeat every decade, they stop looking like accidents. They start looking like symptoms. Today, global debt is higher than at any point in human history. Governments borrow to survive, corporations borrow to grow, and individuals borrow just to exist. The entire system depends on one dangerous assumption: that tomorrow will always be bigger than today. Money is created faster than real value. Profit is guaranteed for lenders regardless of outcomes, and risk is pushed downward instead of being shared. When growth slows, the system shakes. When debt cannot be rolled forward, collapse becomes inevitable. No bailout truly fixes this. No interest rate cut can save it. Because the problem is not policy or management. The problem is design. Now imagine a completely different way of thinking about money. A system where money is not treated as a product, but as a tool. Where profit exists only with responsibility. Where returns are earned rather than promised, and where finance is directly tied to real economic activity, such as trade, assets, and productivity. This idea may sound radical in the modern world, but it is not new. It has existed for more than 14 centuries. Islamic economics is often misunderstood. Some see it as purely religious, while others reduce it to nothing more than interest-free banking. In reality, it is a practical economic framework built on simple but powerful principles. Money must be connected to real value, risk must be shared rather than transferred, and wealth should circulate through society instead of concentrating endlessly at the top. This is why interest, known as Riba, is prohibited. Not as a spiritual rule alone, but as an economic safeguard. Guaranteed returns without risk encourage excessive debt, inflate speculative bubbles, and deepen inequality. Over time, they weaken the entire financial system. In the modern financial world, lenders are protected even when borrowers fail. If a business collapses, the borrower absorbs the loss while the lender still collects. If an economy slows down, debt does not disappear, it multiplies. Islamic finance reverses this logic. Profit and loss are shared. Investment replaces pure lending, and returns must be earned through real success. This single shift changes incentives across the entire economy. It discourages reckless expansion, limits unsustainable leverage, and reconnects finance with reality. This is not just theory. Islamic financial institutions operate today across Asia, the Middle East, Europe, and Africa under internationally recognized standards. They finance infrastructure, trade, and real assets rather than abstract speculation. No economic system is perfect, but systems built on risk-sharing instead of endless debt tend to absorb shocks better over time. Stability does not come from growth alone. It comes from structure. As trust in money continues to weaken, people around the world search for alternatives. Some turn to gold, others to digital assets, and many simply lose faith altogether. But the real question is not which asset will survive the next crisis. The real question is which system deserves our trust. Perhaps the future of finance is not about inventing something entirely new, but about rediscovering principles designed to prevent collapse in the first place. When money loses trust, entire civilizations pay the price. Islamic economics does not promise perfection, and it does not claim to eliminate crises. But it asks the questions our current system avoids. Should profit exist without responsibility? Should money grow without work? Should risk always fall on the weakest members of society? This channel explores those questions calmly, honestly, and without slogans, because the future of money is not just a technical debate. It is a conversation that affects every society, every generation, and every life.